At Campbell's Food Service, giving operators more is at the heart of everything they do. More versatile, chef inspired products, more time saving solutions, and more support to help your business succeed. Do more at campbellsfoodservice.com.
Sprinkles shuts its restaurants down. Noodle stock might cease trading soon, and restaurant stocks had a brutal year. Welcome to Restaurant Daily, your daily dose of the most important news in the restaurant industry from the editors of Restaurant Business and Nation's Restaurant News. I'm RB Editor-in-Chief Jonathan Mays.
And I'm NRN Managing Editor Leanne Zinsmeister. Sprinkles Cupcakes has abruptly closed all of its company-owned locations. Founder Candace Nelson shared the news this week in an Instagram post, noting that she was surprised by the decision. Nelson sold the company in 2012 to private equity firm Carb Riley, which grew the concept to nearly 24 brick-and-mortar locations, in addition to automated vending machines. The company launched a franchising program in 2023 and ended 2024 with about $44.5 million in sales. In a statement to KTLA, Carb Riley said it made the difficult decision to transition away from operating company-owned bakeries, quote, after thoughtful consideration.
Well, that's one way to put it. It could soon become a lot harder to buy Noodles and Company stock. The fast casual chain received a delisting determination letter from the NASDAQ stock market advising that shares of the company would cease trading unless the restaurant chain asked for a hearing. The chain faces a delisting because of the price of its shares, which have struggled to get above $1 per share. The company has scheduled a shareholder meeting for February 4th to vote on a reverse stock split, which would combine shares, reducing their total number but increasing their value. Noodles and Company's share price has been below $1 for the past 6 months and most recently traded at 71 cents.
And restaurant stocks on a whole had a bad 2025. The median restaurant stock declined 16%, and an AI-generated stock index of 20 top stocks declined by 7%. This was during a market in which the S&P 500 increased 16%. Why did restaurant stocks fare so poorly? Sales had a lot to do with it. Numerous restaurant chains, including fast casual stalwarts like Chipotle and Cava, had tough years on the market as their sales slowed down. But several companies faced existential questions about their business models, notably Fat Brands, whose stock fell 94% on the year over bankruptcy concerns.
Yeah, that sounds bad. Speaking of Fat Brands CEO Andy Wiederhorn has been tapped to be the CEO of Twin Hospitality Group. The owner of Twin Peaks has ousted CEO Kim Borema, who had been in the job for just 6 months. Wiederhorn has been Twin's chairman since August and helped lead its spinoff from Fat Brands last year. Twin Peaks has struggled since then, reporting 4 straight quarters of negative same-store sales.
Burger King and Popeyes have new chefs. Amy Alarcon has been appointed head chef for Burger King after serving 18 years leading culinary for the fast food chain's sister brand Popeyes, where she led that chain's innovation, including its wildly popular chicken sandwich. Robert O'Brien has been appointed head chef for Popeyes, following 17 years as a culinary leader within Popeyes under the direction of Alarcon.
Another restaurant chain has declared bankruptcy. Ohio-based Ray Ray's Hog Pit has filed for Chapter 11 bankruptcy protection following the closure of 3 locations. The company was founded in 2009 by chef James Anderson and grew to 7 locations throughout central Ohio. It was once featured on Guy Fieri's Diners, Drive-Ins, and Dives. It is the latest chain to file for bankruptcy this year, as such filings have increased more than 10% compared with 2024, according to the Administrative Office of U.S. Courts.
Sweetgreen has officially sold Spice to Wonder. The deal for the robotics company consisted of $100 million in cash and $86 million in stock. Sweetgreen said selling Spice will allow it to focus more on its own growth and operations, while food hall delivery company Wonder plans to use Spice to automate more of its business. Sweetgreen acquired Spice in 2021 for about $70 million.
Wonderful. Jack in the Box is kicking off its 75th anniversary. The fast food chain plans a year-long campaign featuring throwback items, exclusive collectibles, deals, and more. The chain is also bringing back its Chicken Supreme sandwich for the occasion, which was first launched in 1980 and retired in 2004. This celebration comes as the company works through its Jack on Track turnaround program, put in place by new CEO Lance Tucker following several tough quarters.
Razoo's Cajun Cafe has a new owner. Dallas-based M Crowd Restaurant Group acquired the chain out of bankruptcy in a $19 million credit bid. M Crowd owns the 25-unit Mi Cocina chain and other brands. The company plans to work on improving Razoo's food and service, starting with some signature dishes and the beverage program. It also closed 9 locations, leaving Razoo's with a total of 11 in Texas and North Carolina.
2025 was tough on the Washington, D.C. restaurant industry, among other things. Closures in the district reached a 3-year high and nearly doubled from the number of closures from 2022. New data from the Restaurant Association Metropolitan Washington shows that more than 90 restaurants closed during the year, compared with 73 in 2024. 72% of mid-price restaurants reported lower sales, while 76% recorded declining traffic during the year. According to a survey from the association, 83% of operators remain concerned about federal layoffs and immigration policies, while declining tourism also played a role in 2025 trends.
And that should do it for today's edition of Restaurant Daily. Get the latest restaurant news every weekday wherever you get your podcasts. I'm Leanne Zinsmeister.
And I remain Jonathan Mays. Have a great day.
Thank you for listening to today's episode of Restaurant Daily. Rate us on Apple Podcasts, Spotify, and subscribe.
At Campbell's Food Service, giving operators more is at the heart of everything they do. More versatile, chef-inspired products, more time-saving solutions, and more support to help your business succeed. Do more at campbellsfoodservice.com.